Hello everyone, and welcome to the November edition of PwC Nigeria's monthly tax podcast series. Last month, we discussed a landmark ruling by the TAT with respect to the legality of the country-by-country reporting regulations in Nigeria, and of course, by extension, other regulations issued by the FRS at the time. Please visit our social media pages for further details on this interesting case. Today we'll be discussing two recent TAT rulings which are both centered on VATability of real estate income and software services, among others. My name is Obadina, and today I'm joined once again by Kenneth, Erikume, partner tax reporting and strategy at PwC Nigeria. We are really excited to have Kenneth back on the podcast, and so Kenneth is also the chief operations partner for PwC Nigeria with remarkable years of experience in tax and strategy. Welcome, Kenneth.
Thank you, Israel. It is my pleasure to be here.
Today we'll be discussing the recent judgments of the Tax Appeal Tribunal in two appeals. The first is between the FRS and the NGX Real Estate Limited, where the FRS had served an assessment notice on NGX to remit VAT on the rental income it earned from the sale of buildings in 2020. The company contested the legality of this assessment and appealed to the TAT. All right, Ken, so we have quite a lot to get your thoughts and perspectives on. So yeah, let's begin.
Let's go.
Yeah, so starting off, right? So what are your thoughts on the TAT ruling in the NGX Real versus FRS? That case, what are your thoughts?
Now, that was quite an interesting judgment, and it comes from an interesting history as well. The previous FRS circulars actually exempted VAT on residential rent from VAT.
Okay.
However, the law did not specifically exempt residential rent from VAT. And the way the law was worded in the past, before the 2020 amendment, it did not have clear definitions on what constituted goods or services.
Oh.
And so people began to have ideas and thoughts around buildings and property and whether they were VATable, either when they're sold or when you lease. Interestingly, there was a conflicting judgment, actually two conflicting judgments at the Tax Appeal Tribunal.
Okay.
In one of them, the ELA versus FRS, it was decided that VAT applied on rent of commercial buildings based on the definition of supply of goods. In SA, no VAT on all rent because leases were considered as incorporeal property. And that was stemming from the fact that there was no definition of what was goods or services. But this particular ruling aligns with the Land Use Act, which considers buildings as part of land and therefore VAT exempt. And not just the Land Use Act, but even the Interpretation Act that defines what land is to include the attachments to land. And I think it's quite important because, the VAT law as it's currently worded exempts interest in land and buildings.
Okay.
So interest in land and building could be proprietary interest, which means you own the land and building, or it could be possessory interest, which means you're leasing the building. You don't own it, but you're in possession of it. So to that extent, we're quite comfortable with the current wording of the law that there is no VAT either on the lease or purchase of land and building, and land is anything attached to it. Interestingly, the current VAT Act actually defines what buildings are and what you would consider to be attachments to land. So one needs to be careful around that. Not every building or every attachment would constitute land and building in the context.
That is quite interesting. But yeah, so looking at the judgments, do you think that the FRS would want to appeal this, and what are the chances of success if it does?
I believe that their chances of having a success if they appeal it would be very marginal, because the law is quite clear, whether in the Interpretation Act or in the Land Use Act, it's very clear that buildings are part of land. So I suspect that they would avoid appealing this case because the precedent will be very clear to every single taxpayer.
Wonderful. Well, NGX is clearly allowed to enjoy this win, really. So moving on to the MTN appeal, which is quite a landmark case, if I must say, right?
Indeed.
Yeah. Now the TAT had rules that VAT applies on software licenses, training services received abroad, right? Let's start the issue of software licenses. Do you agree with the TAT's line of thought?
So this is quite similar to the issue of land and building, by the way. So software, by their nature, are not goods. And also, you cannot say they are services because someone is not expending effort to deliver a service. So, in terms of how the VAT Act was worded in the past, intangibles were considered to be out of scope because VAT was only applicable on goods or services. This was also the precedent that was set in the case between CNOC and the FRS. In that particular case, it was considered that the transfer of a right in a production sharing contract did not constitute goods or services, and therefore they were out of scope for VAT purposes. So intangibles, incorporeal property were considered to be out of scope. The VAT Act was subsequently amended to clearly include intangibles as services, but should not be applied retrospectively.
Yeah.
So one of the things that the judgment did not appropriately consider, in my view, is the nature of software and whether the CNOC case should, appropriately apply to software or not. And I think that if the TAT had gone a bit deeper to define the differences, one would have gained some comfort from that judgment. But as it stands, there are grounds for appeal by MTN on the basis that a federal high court, which is a higher court than the tax appeal tribunal, had already decided that there are certain things that are out of scope for VAT purposes.
Thank you, Kenneth. That was quite insightful. On the training services received abroad, what are your thoughts on the TAT's ruling that such services were subject to Nigerian VAT?
Thank you very much, Israel, for that. Now, this issue speaks to the difference between physical versus economic consumption, right? Now, in the context of a training is not delivered to the corporate per se. It's actually delivered to the employees of that corporation. So in the case of MTN, those employees actually traveled out of Nigeria to receive the training. At that point, the consumption and the supply happened outside Nigeria.
Okay.
When they come back into Nigeria, they're not coming back with training services as a supply. They're coming back with the intellectual property and the knowledge which they've been able to get from that training. And therefore, the supply or the nature has changed. So at that point, it is employment services that they are providing. And I think that this clear delineation or difference was not specifically articulated in this particular judgment. And so for me, I believe strongly that there is a case to be made that when the services were provided, they were actually consumed out of the country. Otherwise, what you would have is a situation where Nigeria is charging VAT on the basis that the services are consumed in Nigeria, and the foreign jurisdiction, say the UK, would also charge VAT. So there will be double incidence of VAT because of the lack of this delineation of where the actual consumption occurred.
That's certainly great advice. And yeah, it's always a pleasure to learn from your years of remarkable experience. As always, we hope that our viewers and listeners will continue these conversations and share more perspectives on their end. So Ken, thank you so much once again for joining us.
Thank you very much.
Viewers and listeners, thank you. So Ken, any final words?
Yes, I enjoyed this podcast, but there is a lot of collateral and assets on our websites and social media pages. So I would encourage our listeners to go there and engage on our podcast, our social media handles. And we've got this application which is available on iOS and Google Play Store called Tax 24/7. where we have legislation, both tax, compliance related legislation, as well as summaries of these judgments and even treaties and things like that. So please go on those our pages and engage more.
And with that, we have come to the end of this edition of the PwC Tax Recap. My name once again is Israel Obadina, and it has been a pleasure being your host for today. Please do watch out for our next episode, and bye for now.